in partnership with CommSec.
So, as I just mentioned there's a few things in focus today. Tom Piotrowski over at CommSec, good morning to you. First of all, we've got the tariffs. That will be an ongoing story this week. Japan and South Korea, as we just reported, first on the list. Then you got RBA rates day. So how does this all fold into today's story?
It's a familiar refrain, Pete. So primarily the trade aspect of things is what has galvanised investors overnight, and that's what's largely been responsible for seeing US markets pull back from their recent record levels. So there's a range of countries, which you mentioned a few of, but these letters have gone out. Helpfully, the President has sent some screenshots out to the media to give us a taste of that correspondence. So we're back to a familiar situation where markets are a little bit on edge because of the headlines that are driving this conversation. Bearing in mind, they don't take effect until the beginning of August. There's still a little bit of time to resolve things as far as trying to get negotiations to a more favourable level where some of these countries are concerned, bearing in mind that in the case of Laos and Myanmar, you're looking at a 40% tariff, which is, if that were to stay in place, that would be quite damaging for those economies. Europe's at 10% at this stage, and that's due to suggestions that negotiations are more advanced in that regard, and that's part of the reason why European stocks did a little better by comparison to their US peers last night. But you had US indices down in the order of about 1%. So that is going to drive US markets for the next couple of days. In terms of the local picture, as you point out, the thinking will be all about the Reserve Bank's decision on rates today. Pete, the risk here is that they are more hawkish than what the market expects in their conversation after the rate cut. So it's almost universally expected that they'll cut rates today. If they don't continue with that dovish conversation that we've heard from the Reserve Bank in recent months, that'll be unwelcome on the part of the markets, and that's where the main risk is. But that's less likely. We'll get the rate cut. They'll potentially pave the way for future rate cuts, and that should be at the margin supportive for the market, which will kick off with a loss of around 0.5%.
Yeah, I just said he's put up a few more letters on his Truth Social account there, Tom. Yeah, he's gone through a few nations: Tunisia, Bosnia, Indonesia, they get 32%, Bangladesh, Serbia, Cambodia 36%, Thailand 36% as well. So he's rolling them out now. I appreciate that, Tom. We'll talk to you in a few hours' time.